Good morning, this is TA for Traders. I'm Nigel Croft and it's Tuesday the 7th of March. In this short video I'll be looking at the 5 major currency swaps. On the Euro US dollar I'm still negative. Dollar against the yen could be interesting, broken a downtrend, worth watching. Pound against the dollar, looking for that to move lower. Dollar against the Swissy, looking for that to move higher. And Aussie dollar against the US dollar, it's moved up to a resistance level and further range trading should be expected. So let's move and start straight away with the euro against the US dollar. You can see I've now drawn this downtrend from last September coming through the highs. This is what's holding the market back and the trend that the market's following. And at the moment, there's no sign of it moving up to this boundary or breaking it. You can see that on the immediate, we've got the yellow line, which you can't see. It's actually virtually at spot. That's the 20-day moving average, which is a negative influence as it tracks downwards. That's pushing the market down in the very short term. You could say it's slightly positive that the 50 days now moving upward. So if we could get a push up, that should be a positive influence. But as we saw yesterday, the market moved above the 50-day, couldn't hold it, and shifted back down. So yesterday was a negative move, especially after the move that we had on Friday, which was a very positive move up to that 50-day. We couldn't hold the level above the 50-day, so one would expect the market to track down now the 20-day and come back down. The RSI is still below 50, 46.80. MACD is just both tracking sideways, not giving any indications at all. On the longer term picture, you can see the downtrend here has been caused by the 20-week moving average, which will give resistance at 106.60. The market at the moment 105.746, and that's a downside influence. The RSI is showing short-term negative momentum down at 41.56. MACD and neutral. Just going on to the support resistance levels on the Euro USD. You can see the resistance at 106.6794, 108.291, and then the supports there. If you need to look at these in a close fashion, please just pause the video. Moving on to the US dollar against the yen. Again, I've drawn a downtrend, and we've actually broken above the downtrend, and you can see that the market's now nestling up against the 50-day moving average, which is downtrending, presently the 114.16 level. Both of these are negative influences on the market, but it is positive that we have moved above the downtrend. The RSI has started to show the first signs of positive momentum, tracking upwards with this rally, and is now back above the 50 level. And also on the MACD, we're starting to see a slight divergence between the short and longer term MACD levels, which is an indicator that the upside momentum is increasing, and actually is a positive sign. So overall, I would take the view that this should move higher. If we can break through the resistance of the 50-day and then the slight highs that we saw last week, then we should push up towards the 116 level. On the longer term, the weekly chart, you can see that just as in on the Euro US dollar, the 20-week was moving downwards and being a negative influence. Here we can see that it's actually tracking upwards and is a positive influence. And it's been very positive that it's held the last 2 weeks, and is now, we're getting this trampoline effect as it moves up. Definitely one would expect, even on this chart, for a move above the 116. RSI is still positive, not this different picture than we're seeing on the daily, but it seems to have broken its own downtrend. MACD are actually still quite negative because of this downtrend that's been in place since December. But overall, one would be positive on the dollar on this picture. On the support resistance levels, the resistance is at 114.75 and at 114.96, and then the first support comes in at the 20-day 113.33 and 111.67. Moving on to the pound against the dollar. Here we've broken down over the last week, and the picture continues to look negative. One would expect, after a breakdown like we've had after being range bound for quite a time, for the market to become oversold. The RSI at the moment is only 36.08, so can go a lot lower. I mean, obviously back in October it went down below 20, so it's not anywhere near oversold levels at the moment. On the negative side, you're going to get the 20-day crossing the 50-day, both moving downwards towards the end of this week. The MACD is now rolling down, and really it all looks one way, all looks negative. Got support coming in at the lows of January, which I'll show you in a second what levels those are at, looking around the 119.75 level. On any rally, the moving averages will be a negative influence at the 123.91 level, so a limited upside, more scope to the downside. And if you look at the longer term picture, you can see here that it's the downtrend in 20-week moving average that's causing all the trouble. Market tracked through that for the last 4 or 5 weeks, what seemed like a sideways move, but actually was moving down with the 20-week moving average. We've now broken down. I would expect to move down into the lower Bollinger Band here. The RSI, which still is indicative of negative momentum, has started to track down again, and the MACD have started to roll. Looking at the support resistance levels, resistance at the 50-day 123.91 and second resistance at 125.70. The supports coming in 119.87 as I said, and then below there 119 and 50. On to the Swissy, and here it's looking good for the dollar again. It's broken above the downtrend in 50-day moving average and has held above there for 4 days now. We had the as I was talking about last week, we've had the trampoline effect of the market coming down to the 20-day moving average and bouncing upwards. The 50-day held it. Now we've moved above the 50-day. Expects the resistances at the 103 level to be tested in the not too distant future. RSI showing positive momentum, presently trading at 58.58, and the MACD, which has been positive from mid-February, still very indicative of a market with upside momentum. On the longer term picture, you can see here that the market has bounced up through the 20-week moving average and looks set to test the resistances from December. Again, the RSI has gone back above 50, 57.88, and the MACD are just about to cross again. So a positive picture there. On the support resistance levels, resistance at 14.62 and then 24.80, and the support at 10058 and then 10092. Finally, moving on to the Aussie dollar. Now, last week I was talking about some consolidation about to happen as the market had moved up into the resistance that we saw through last August to November, and this has happened. I actually expected the market more to move sideways rather than the fall that we had, but the fall has kind of extenuated the decline. The 20-day now started to roll down. Yes, we're going to get the immediate support from the 50 and the 200-day, which are both moving up and actually just both crossed. So what you're going to see is going to be a range-bound market. The RSI has lost all its momentum, is 46.84, and the MACD have rolled over, indicative that the uptrend is broken, and it's more of a negative trend at the moment. On the longer term picture, you can see this band of resistance that we had been expecting to hold, and the market pulling back. Here we've got both the 20-week and 50-week about to give support at the 0.75 level, 7595, 7512. So I would say the downside again's limited, but the upside's capped by all the resistance. So I just really expect the market to be range bound. On the support resistance levels, we've got the resistance one at the 20-day moving average, 0.7655, then 0.76996, and the supports, as I've said, at the 50-day, 0.7539. And then support below there at the 75119 level. This has been Nigel Croft with the TA for traders for Tuesday the 7th of March. I hope you enjoyed the video. I'll be back in about half an hour when I'll be looking at the minor currencies. All the technical analysis that I've given in the video is for educational purposes only, and please do read the disclaimer that's about to come on the screen. Thank you.